Thursday, February 2nd. Market analysis, Stan Ehrlich. You guys know I always start with the S&P 500 and stock market indexes in general, DIA, QQQs, and sometimes the Russell 2000 as well. Then I go into futures, and then I go into forex and sectors. Now today I'm not going to drop off forex and sectors. I'm going to concentrate on the indexes and the futures. We have a brand new sell signal in gold today, and I'll get to that in a few minutes. A little segue. So you can ask me questions, info@ersignals.com. We have overbought conditions. It's the second day the S&P 500 and some of the other indexes are overbought. Watch out. We're about to have a downside retracement, and it'll probably be in the S&P, SPY, down to 410.5, very close to that price, I think. Maybe down to 405, another 5 more points. Last is 17.5, 417.5. So that's not a lot of retracement. Certainly not the amount we've climbed, for example, from the 370s up to 417 in a month. Been a great bull move above the 200-day moving average, the Dow theorist long-term investor type moving average, turning the trend up, supposedly. We're now well above the neckline of a head and shoulder bottom that we caught the bottom day of on October 13th in advance. I told you it was coming. And now a new high for 5 months, yesterday and today. On the way up, by the way, I think we have a reasonable chance of stopping this rally right here at about 421.22. The finishing of closing an old gap way back when the market dropped sharply the day after August 19th of 22. There's a gap that's left. Most of that gap was closed 3 or 4 days later, but not completely. Don't forget about gaps. They tend to be like a black hole in space and suck everything close to it into it. I think that's my best analogy that I can come up with as to why the heck that happens. Of course, that's a fairy tale, but who knows? It just keeps happening. That's the whole point. It keeps happening again and again. In fact, since I've been making these recordings, we probably have had a dozen or more. Now, overbought at the moment. Yes, we're above the long-term bear trend line. It's now a bull trend as far as that's concerned. We're above the neckline. It's now a bull market as far as that's concerned. Above the 200-day moving average now, as far as that's concerned, a bull market as well. Watch out. We're going to get overbought occasionally in the months to come. This is the beginning of the bull market of 2023, in my opinion. We're going to see the market get a little bit oversold now and then. But as far as getting overbought is concerned, bull markets don't like to go up as fast and as quick as bear markets go down. So you see oversold conditions in bear markets more frequently and more violently, and a deeper oversold condition occurs more often. Bull markets are going to get lucky to get overbought. They won't get that overbought, and they won't stay that overbought for that long. And they'll, get oversold, and that's when your buying opportunities occur as long as the trend hasn't changed. I'm claiming that tomorrow, maybe by the end of today, and it's almost 11 o'clock, I've got 8 more minutes. We still have 2 hours and 8 minutes to go. And it's just playing right up there at the highs, chewing away at the highs. Let's go look at some details. Resize that and go to my index tab. And a little sideways here for 10 minutes, no big deal. The important part is new highs. We opened, gapping up, came down to the previous day's high plus a little bit more. That's the yellow price action here on this 1-minute chart. Roared into new high ground. Stalled out, poked away through the resistance, but didn't go anywhere. And then finally, just recently, we made new highs for a while, 10 minutes. There's been a retracement back to a little support. That's okay. And I think it's going to make a new high again. We're up 666 exactly, then a devil's number. And probably just need a little bit over 7-ish net change for the day to be in new high ground price-wise. Good. I like it. DIA is a totally different story, with interest rates probably being the, oops, I've got a little error happening here. I apologize on that. Let me get rid of that for the moment. We are still in a pennant formation with the DIA. We don't have any upside follow through. It's going to take a while. It is a head and shoulder. We just don't have the strength. Interest rates, the perception of interest rates, which is buy the rumor, the perception, sell the news. My saying, by the way, my twist on that is trade the expectation. In this case, it's not bearish, it's bullish, and the market's going up. We're trading the bull expectation that rates are going to go down, but reverse on the realization, and that's, sell the news, buy the rumor, sell the news. But my saying trade the expectation, reverse on the realization applies to bear trades as well. Both sides getting in and getting out. We're actually lower on the day in the DIA with this QQQ up. Well, we're going to see in a moment a lot. Actually, I'm cheating. You can see it up here at the top of the screen, 12 points on the QQQ. So the DIA is going to languish around for a while and maybe give some different signals. But it's not that it does not have a head and shoulder bottom. It does. It just has a slow moving version of it, which is kind of unusual. The QQQ just screaming hot. The RSI is 83. You don't see the RSI at 80s, the low 80s very often. I have to go back to November, wow, of 21 to see the RSI that high on this daily data using my custom RSI. Dangerous, ding, 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 don't go long. Look for reasons to go short and look for them now. There's a possibility within the next 2 hours, it could start breaking down pretty quickly. We've seen moves faster than that before, that's for sure. Not lately. Dangerous up here. But I'm right about the head and shoulder bottom. That's the important part. And I think I'm going to be right about the bull market that we're going to have this whole year. The Qs broke out the first. They're the strongest. The marketplace perceived that the Fed was going to start doing what it's doing. So it's on the right track. And you trade the expectation, remember? So up you go quicker on the low cap, which is benefiting more from lower rates than the high cap DIA, which is well financed, and spiders in the middle, which makes sense the way it's moving. But there's a gap. Watch out. The previous red resistance zone, the Qs just busted out of the top of it today, and it tested the exact bottom of it, 6 days ago, 5 days ago, and then blew through it again yesterday and today. That's going to be support. Qs are going to come back and close the gap, and it's going to be about 303.5. And it's going to happen in the next, 2-3 days. Again, right now, 1330, bunch of threes, except for one. Just could be it, and I don't know it. I can't say that it is. I'm just extremely suspicious. The 1 minute chart just jumped like crazy, and that is another indication that you're close to a top. They're called blow-off tops. They happen on extreme fast strength. 2 hours to go. Wouldn't be surprised if it jumped up more, got to 15, 16, 17, 317, but that's going to be it. But it's going to run away, move at the upside, blow off top. DIA is doing better, a lot better, but is not. Yeah, it just made a new high for the day, and now we're up 720 in the S&P, new high ground again. That's exactly what I thought. Look at this, ladies and gentlemen. The Russell 2000 formed a long time ago, many months ago. This green resistance area used to be red. And several times on the way up, it basically stopped a little bit higher in that one, stopped right in on that one, stopped right in this area on that one, stopped right in the area on that one. 4 out of 5 times, we've seen the market behave like I expected right in that zone. And a few days ago, it was trying to stop in the same damn zone, but it's blown through it 2 days ago. Now, yesterday got overbought again. Everything's overbought here except for the DIA. Too dangerous to run after, and almost gapped up this morning. Not quite, but this blew away a major resistance area, which I now turned to green because it's now support. We'll be coming back down to maybe 190, give or take a small amount, 10, 20 ticks, it looks like, on the 2000. Well, that's it. Now, remember the minimum upside objective. I'm going to go back to the daily and the S&P. Minimum upside objective on this is going to be all-time historic highs. You take the low of the head and shoulder bottom day, the low of the day, the low of the pattern, and you measure straight vertically up to where the neckline crosses the vertical line. That's the horizontal crosses the vertical. And whatever the hell that measurement is, you take that amount, and it's in this case a trend line without extending itself up or down, and you drag it over to the day it breaks above the neckline, assuming all that happens, which it did. And you measure from the low of the line, the measurement, up to the minimum upside objective for the pattern. That's how it's done. So nothing's going wrong here of any consequence, period. It's just getting a little bullishly carried away. We're about to turn back down again, maybe a few points higher, 2, 3. And I lost track. The minimum objective on this is, look at this, way, way up here to almost new historic highs. So what conclusion can you come to? It's going to make new historic highs. It's going to go substantially further than the minimum upside objective for this pattern. It's a long-term. It's hard to stop a train. I'm going to talk about futures real quick here. Cold scare, Florida, orange juice ruined the top formation that I think was forming, and zoom. Commentary about overbought still stands. We're at 96. Come on. Today's probably the high day on the orange juice. I would not be surprised. Thursday, February 2nd, high in orange juice to the day, and it's still in the upper half of its range at the moment. I can't say that's really the case, but I'm extremely suspicious. Next chart. Gold, brand new. Today is the day. Bear sell signal. ER, automated. ER1 is short and profitable as of making a low lower than yesterday's low. ER3 needs to go short tomorrow, the next day, or the next day. At the red dot. We'll see if it happens or not. That rhymed, didn't mean that. I'm bearish. It is the second sell signal in 6 days. It is the highest high now, not much higher than the first sell signal, and maybe starting to cluster. Remember, and here's a great example. We had 1, 2, 3 buy signals smack dab at the bottom, which ended up being a double bottom or triple over a couple of months. But it's the first low of significance. That's good. 3 greens, one of them, the middle one, bingo, the best one. And a retracement the next day touching the green dot. So we not only bought it, it's about the same price. Okay. Unusual. Usually it's a little lower for the bid, but it's a mathematical formula. So, hey, what do I know? Gold, new short sell signal today, February 2nd, 2023. I don't know how profound it's going to be. It could be pretty profound. We're pretty high up there. I think it's going to be pretty important. Maybe the tune of 1,800 or lower. Next chart. E-mini, nothing new to say, just like the S&P 500, except the neckline was a little bit different because of the overnight market that trades in. And of course, that means the rally high that occurred on 12/13 raised the trend line up a little bit. So it tested it a few days ago. It never broke out until yesterday. But today is a nice big follow through, and the E-mini's overbought. When's the last time it was overbought? And the answer is the last time it topped out. Come on. History repeats itself. Human beings don't seem to be able to learn from that very easily. As a technical analyst, I believe I have. I hate telling people that this is a great bull market and you should get long. Right here, right now, not a good idea. On a small retracement back toward the neckline, much better. If you're wrong, smaller loss, smaller risk. If you're right on the retracement, bigger profits. That's the name of the game. Next chart. Still, the top of the market is our bearish engulfing. A couple of weeks ago, we came extremely close to getting stopped out on a long-term basis, and now the market is up again a little bit today. I don't know. I'm a little skeptical about soybeans here. Neutral at the moment until we start closing below yesterday's low. That would make you feel a lot better. And then again, we would have to break below the low of the last couple of weeks on a closing basis to be able to say that I did pick the high of the rally. But right now, I'm thinking a little bit iffy. Next, live hogs, buy signal, didn't work. A lower low, no downside follow through. Yesterday, closed above the previous buy signal low. Today, we're up pretty good. And yesterday, we did get oversold. This could be building a little bit of a bottom. It is in a significant support area historically. So I'm neutral to, I don't know what, neutral. Thinking maybe it's going to go up. Cocoa. Head and shoulder top still good. Need to close a new low ground real quickly. Head south toward that neckline within a next week easily. Break the neckline and you're off and running for a move down to probably 2,300. And that might take 1 month, maybe less, 3 weeks. Next. Heating oil. We sold the high of the rally. We had a secondary sell signal slightly lower 3 days later. We are in new low ground and closing a new low ground probably since the sell signals. It's perfect. What the hell can I say? Except, hey, we're getting close to oversold, so don't get too optimistic. If you did take these trades, be prepared to take some profits. Remember, the system is built for swing trading, but because of the way it's built, we do pick huge, major tops and bottoms. And I really, at the time they happen, don't necessarily have a handle on whether that could be the case. Now, the stock market October lows in October, that was a different story because that's also a seasonal trade. You often, frequently, almost 90% of the time, I think, in the last 30 plus years, have gotten a low in October of some significance. Not necessarily as significant as the last one, October 13th of 2022, but sometimes. December, no, that's December. Okay, forget, that's a Santa Claus rally. Next. Heating oil is that one. Now, we also got a sell signal very close to the high only a few days ago in cattle, and now we have a new low and approximately an unchanged close, probably just a hair higher at the moment. I think it's going to come down more tomorrow. We're not oversold. We're not that close to it at the moment. And it's not at a good support area, which is only a little lower. So I'm looking for 73.25 maybe for tomorrow's low. Next chart. Platinum. We bought it at the bottom. And that was this week. Tuesday. This is Thursday. We got a green bullish ER buy signal at the bottom of a 3-week break after a red sell signal at the top of the rally. Give me a break. All right, so far, higher high by a chunk than the high of the bullish engulfing, well up in the air and selling off a little from its rally high today. But new high ground nicely. This is looking very good. I expect it to move all the way back up to maybe 1,100 in the area where it topped out before and maybe make higher highs for the whole damn trend, which is up. We picked that little rally high right there for a few days. We picked that rally high right there for a few days. We picked the beginning, almost the lowest low of a rally for a couple of weeks right there. That's a bull signal. We picked almost the high of the rally right there. Okay, next chart. That was platinum. Sugar. Overbought. Don't chase the market. Overbought. Expecting retracement. Trend is up. Looking for higher highs over time. Next. Coffee. Bear trend and a pretty good rally, a little bit higher than I expected earlier when it got oversold, and that was about 3 weeks ago. But I still don't think it's going to go much farther, if at all. I think maybe the high was yesterday. Today's an inside trading range day. It's still overbought at the high of the day and has been overbought for 5 days now. Yep, that's right. It's topping out, I think. Can't be very sure. Didn't get a signal, unfortunately, but overbought for 5 days. Next, wheat. Who cares? Dull, boring, dull. High grade copper. Warned you about a top. Now it's proving me right, but it took too long. Sorry about that. It was 2 or 3 weeks worth of fiddling around and rising very slowly. Mentioned loss of upside momentum. Started to drop off, bounced slightly, and today is a lower low since then, and a new low for a couple of 3 weeks. And already getting close to somewhat oversold, but not quite yet. Probably going to be a good buy, just under 4. Next chart. Natural gas. The reverse statement almost completely. Oversold periodically for too many days, kind of expecting it to start to rally suddenly and substantially. This is one of those markets where you're too comfortable being short. You're just too happy. And that's not a good thing. Being too happy makes me worried. Okay, next chart. Live cattle. New high, bull trend, nothing wrong, not overbought. Expect a little bit more strength, but we're probably close to another little retracement. But bullish. Next, bean oil, neutral. We caught the low of the break last month, December. Well, now it's February, sorry. 2 months ago on the 12th of December. Was a very nice rally for a few weeks. Now I'm neutral. Over many months, we have lower highs and higher lows, of which, of course, the last low we caught very, very nicely on December 12th. Next chart. I'm neutral. Next chart. Corn. Same statement. Caught a couple of very good turns. Basically, just look for green and red. That's all you care about. That's all I care about. Looking good. Yeah, I look at patterns. You got a head and shoulder bottom in here with a very sharply downward slanted neckline that worked really good, by the way. It's probably on the line right there, that retracement. And you got a very, very large head and shoulder top. There's the shoulder. There's the head, shoulder on the right. And the neckline slanted upwards somewhat. So it didn't work quite right. That rally was above the neckline, should not have been. And it may not have fulfilled its downside objective completely. That's a little bit unusual. It came pretty close. So yeah, I do watch for patterns. Next, bonds. As you know, 10-year notes and bonds, I'm looking at a long-term bottom being built. We're close to making new highs. It's not quite there. I don't think it's going to be a runaway bull market. I think there's more base building, quote unquote, to have happen. I'm not sure exactly how or what, but I'm kind of expecting a big sideways movement with maybe some minor significant new lows, but the slight long-term trend is going to be sideways to higher. We could make minor new highs in the next couple of days, but I don't think it's really going to go anywhere. And this particular chart, I would be buying decent dips that got mildly oversold or extremely close to oversold, and some other helping support reasons to be a buyer. Next chart is 10-year notes, same thing. Next chart is silver, boring, can't get above resistance and stay there. The rally high this morning challenged resistance, and it failed miserably. We're now almost unchanged, just a hair higher for the day, lower than the middle of the last month and a half, 2-month trading range in one day. Tested the top and came back down. That does not bode well. It looks like it's building a top, but it's a bull trend. Lots of support underneath. I expect a short-term downside correction, but the trend is up, so maybe in a month or two, it's going to make new highs. Next, OJ, we started here. I'm going to leave you with that. We now covered stock market indexes and the futures in markets. As again, I'm going to skip the forex and the sector. Today's recording is a little shorter, therefore, and probably tomorrow, Friday, the end of the week, I'll include forex and sectors and try not to be as verbose about the stock market indexes, which is doing great. We picked some very good turning points lately, very profound. Remember, it's my opinion we have started the bull market of 2023. Signing off. Have a great trading day. Profitable trading to you.